Investors and traders, welcome to the channel at Market Chart Pattern. Today is 20th of October 2024. Hope everyone is having a great weekend. We will be taking a deeper dive into the US stock indices and sectors in this video segment. I had done a video about the US bonds and US dollar and key currency pairs, and also gold and silver market. So I will put a link to it towards the end of this video in the captions. So please do watch that video. That's going to give you the perspective of those markets, because the videos for the weekend get pretty long, so I'm trying to break this into two parts. So as always, this video is for educational purposes only. It is not a financial advice. For the new subscribers, and just for a reminder, we are looking at the daily chart for our timing model. The timing model has done a fantastic job of actually picking up key turning points in the market. And we have a key date coming up 7th of November with 2 to 3 trading days on either side. So just make a note of this one. Now let's move on to the cash market, S&P 500. We move over to the weekly chart. Here we go. This is the weekly chart of the S&P 500, and we had a target right into this shaded region, this box around here. We have this really big ABCD completing around 6100. And then we have this smaller ABCD also completing thereabouts, and then we have this blue one completing around 5900. The smaller, really small one, red, actually completed last week. And so we're getting into the zone where we have a number of these actually completing. So when we have a confluence of two or more patterns or ratios coming together, that is something we need to pay really close attention to. So what is happening is that around here the market seems to be creeping higher, but we're also getting into a time zone because we have got elections coming up in the United States in early part of November. We could expect or get into a pocket of volatility, but nonetheless, because of these patterns that we had identified months in advance, the market seems to be moving in the identified direction. And if we just move down to the daily chart, shorter term, and what we can see is that 5800, 5815 was the region we were watching. This is this shadow region. The market kind of went sideways, and it's still got a bullish tone to it. From a momentum perspective, it's strong. Likelihood is that we are going shorter term on the daily chart targets 5935 to 6000 that we can have a look at on the daily charts, and of course on the weekly charts we have the higher targets to take a look at. Now if we move down to the NASDAQ 100 futures, excuse me, I should have done the ES futures as well. So let's move to the ES futures. Here we go. That's when the bottom came in, 5th of August, and this is where there was a lot of uncertainty at that point because of the sharpness of this move, and in the market chatter, there was a lot of chatter that maybe we have seen a top, and then we could actually roll over from here. But one thing was, which we were confident about, was we had two things going on. We had the key timing come in, so I'd actually around that time showed you that. In fact, we had a really key timing on the Nikkei, which is Japanese index, because all of this was related to the unwinding of the carry trade. So that's why we were really watching that index as well. So we have the 5th of August as key timing coming in, and plus we had this ABCD, where the CD leg in the S&P 500 is actually 1.618 times the AB leg, but it's a perfect ABCD on the NASDAQ 100 futures chart. So we had timing, we had the pattern, and when price meets time, the pattern is complete, and this is what we saw. We began to see the market actually move higher from here, and of course for the next couple of days there was a lot of back and forth, a lot of uncertainty, but then it made a push higher and then a retracement. There was a chance we could actually come back into this area, but it found support from here, and we are looking at this ABCD blue one, which can in fact take us to 5940 on the S&P 500 daily charts. We came very close to that last week on Thursday, 17th of October. We had a high of 5927 and a quarter, so pretty close. And then if we take a look at the weekly chart. Here we go. So this is weekly chart. One thing I would like to iterate is like, look, we have this really nice trend line going back all the way to the March of 2020, which is still in play. And then what we can see is that we have this bigger ABCD pattern on the S&P 500 futures completing around 6100. Roughly thereabouts is also on the cash market. Smaller term targets or ABCD is also pointing towards 6150 roughly. So thereabouts looks like we are slowly moving in that direction. And now let's move over to the chart of NASDAQ 100 through the eyes of the futures chart. What is really interesting is that, look, it completed this ABCD, this green one, and what it did is there was a sharp move lower right into the low of 5th of August, and then the market has still not been able to take the highs out of the 8th of April to the upside, whereas in the S&P 500 we have seen new highs coming. In Dow Jones index we have seen new highs, with the exception being the Russell 2000, which we'll take a look at shortly. And here I'm going to move down to the daily chart, but here there was a point when we were looking at as a possible ABCD move down right towards this 16,300 region, but that obviously did not take place, which is good. So I'm going to remove that, and it just made a retracement. It looks to be a 61.8% retracement. I think on the daily chart we have that marked. And then what we are seeing is another pattern completion, which I'm going to show you on the daily chart. Here we go. So this is the daily chart, and what we can see is there's still a possibility, because of this ABCD in the dotted purple line around 20,900, the market would actually still make a move towards it. But if you look at the way this market is, it is much weaker than the S&P 500, for example. And one of the things that I showed on the other video, which I did yesterday for the gold market, is this ratio. This is the NASDAQ 100 to the gold bugs index ratio, and what we can see is that we can see actually it's the gold stocks, the mining stocks, they seem to be performing better, coming out of really depressed prices, and some of the NASDAQ 100 stocks have been at really highly elevated prices. So perhaps from a risk to reward perspective, the ratio might make much more sense elsewhere and then the NASDAQ 100. And this is the chart. This is what happened back in the .com era, and then what we are seeing is that the NASDAQ stocks not beginning to perform the way they were comparatively to some of the other stocks, for example. So still a chance towards 20,900. There's also a chance that if we begin to see some of these lows, let's say the low of 16th of October taken out, especially this congestion zone around 19,800 to the downside, we could have seen some sort of a rolling or rounded kind of top formation here, which could lead to pullback. But the significant thing is NASDAQ 100 is not as strong as the S&P 500. At one point throughout this rally around here, it was actually leading the stock indices, and ever since the 11th of July, it has actually begun to lag in comparison to other indices. Now let's take a really quick look at the NDX cash index as well, and here we go. This is the pocket we had identified, so it's right in there. And if we take a look at the QQQ, which is the ETF, similar kind of pattern formation, and on the weekly chart, here we go. It's right into this gap formation in the Sherry region that we identified, no new highs. And I'm not going to cover XLK here, but it's going to be a similar kind of pattern. Now let's take a look at the Dow Jones weekly chart. This is Dow Jones Industrial, and we have some way to the upside per our ABCD cycle analysis in the S&P 500 cash and the futures market. If we translate that into Dow Jones, so the Dow Jones is also pointing towards higher prices. with this bigger ABCD since March of 2020, as high as 47,200, and we are looking at about 44,200 shorter term. It's not too far away, the way the prices move these days. So most likely we are going to get into this shaded region that I've identified here based on the weekly charts. Going back here, look, it's just been, look at this trend line since October 2022, still holding really well. This brown trend line is there. So the momentum is strong for it to the upside, but yes, we are also getting into a pocket in terms of time, where we could see some volatility come in. Shorter term, this is the daily chart. This is the region we had identified. We are in that zone already with 43,640 is gonna be a shorter term target. We are almost there, so maybe early next week we can actually fully touch that. This is our shorter term daily target. On the weekly, we have higher prices for this index. Now let's move down to the Russell 2000. Here we go. So this is the weekly chart of Russell 2000, and you can see that this is one of the weaker ones, which is kind of expected because of smaller cap, smaller balance sheet companies. Higher interest rate environment is not very conducive for these sort of companies, and what we see is basically a trading range behavior. Good to see that it's actually back into this shaded region one more time, challenging these highs of 29th of July. So there's a chance it actually could go and actually complete or hit this 2370 level, which is going to be the upper boundary, and it will also be this ABCD red cycle that we see here. Whether we will see the completion of this big ABCD in black, I'm not sure, because I think before that could happen, we'll have the NASDAQ has already completed this bigger ABCD, S&P 500 and Dow Jones would have also completed those. So two indices will come into sync in terms of the pattern formation that we are watching, and this one seems to be lagging behind quite a bit. On the daily chart, what we can see is this is the shaded region that we are looking into, completion of that ABCD pattern that I showed you on the weekly chart. So likely to get into this 2370 mark, S&P 500. And if we take a look at the IWM, this is the weekly. This is the daily chart of the IWM, which is the ETF. The last time we had done this video, I was showing you this pattern right here. So it's very close to this. Pretty much it has completed this, but 227 is 228 is the kind of the exact number on it, and in my opinion that's gonna be a 3 drives to a top pattern. But if you were to just draw a trend line like this, you get to the same conclusion, and this being below this high of 31st of July makes it a bearish pattern. But if the market is strong enough, and what we might actually be looking might be an ABCD with price moving higher, then this pattern will actually fill. And this is something which the bulls actually want to see. Now let's move into the sectors. So slowly, let's start with the real estate. So XLRE. So this is another sector which is really sensitive towards interest rates. So let's go and take a look at the weekly chart. Here we go. So this market actually, this is the pattern that we are watching right at the 61.8% retracement. We had the ABCD, really nice pattern. The price went above it, and then it wasn't able to close above it. Like there was just no follow through. It was this kind of situation here. It pulled back last week. Was a good week. So what can we expect from here? It really needs to get above 45.88, this swing high, for it to keep on going higher. But on the daily chart, let's take a look at a nice retracement, and it's making a move higher. And we can see that if we just draw a nice trend line like this with some overshoots like this, that's also pointing to the upside. But what you could also do is I really see two situations. One, if there is some sort of gonna be a correction, it could take place a correction like this, like an ABCD, coming towards this trend line, or if it is a bullish pattern, then shorter term we can see an expansion of this. This is assuming that this was the end of the correction, and we are not likely to get another leg lower. Assuming that, then we can actually expect this to move to 146.34 followed by 47.28 will be the kind of the targets. These are shorter term targets. I've not drawn the bigger ABCD on this. Okay, now let's actually go and take a look at the utilities. XLU utilities, as we know, we have been following it. They have been pretty strong. We saw the week of 7th of October a little bit of a pullback come in, found support from structure. I think we are actually in this ABCD, the red one. So 85 followed by anywhere between 89 to 92 is kind of we can expect the utilities to move into. And of course you can move down in terms of look further into the ETF structure itself and pick out some stocks which are in it and showing good pattern formations to you if you just want to trade the individual names. Now let's take a look at the XLP, which is the staples, and the staples have also been stronger. They completed this ABCD, the purple one, and then pulled back right into this not exactly but very close to the 80-18 mark. That also is a pretty good support because we have the 38.2% retracement of this swing low to high here, 50%, and then we have the 38.2% of this 15th of April low to the high of 16th of September. It looks like the trend is getting a little bit tired perhaps. So we could see more trading range days, so we might not see this kind of strong move. We might begin to see this actually transition more into a channel formation, but actually moving towards our 85.63 target. On the flip side, it's also possible that what it is doing is a two-step correction, so an ABCD correction, because we haven't seen an ABCD two-step correction weekly chart ever since October 2023. So it could do A, B, C, D, which could actually lead it to pull back a little bit lower to about 77. So really have to wait and see what the what the stocks in the consumer staple would like to do. So we really are in a situation where we could have a two-step ABCD correction. So we could be looking at about 77.50, or the correction might be over, and then we are looking at about 85.63 and even higher. And now let's take a look at XLY, which is the consumer discretionary, and we know that the consumer discretionary had been under pressure. That's of course related to the cost of living going up because of the inflation. So the people have been actually trying to save money and not spending on items which are kind of discretionary categories. So that could be large ticket purchases like buying new furniture, perhaps electronics, something like that. If you already have 3-4 TVs, and why go get a new bigger one unless one really needs to, that sort of stuff. Anyway, from a technical analysis perspective, we were really watching two things. One is this big ABCD in green, that is far away, and what we're really looking at also possibility that we were really at a key point around 195 because of this blue ABCD and 78.6% retracement coming around 196. And what we have seen is the market actually not make a conclusive decision on the weekly chart. It's just gone into a trading range, and if it begins to take the lows of the 7th of October out to the downside, it's likely to come back and touch this 20-week moving average in blue around 187, and maybe even come back towards the lower end of this channel, or lower end of this trading range around 170, 168. That remains a possibility. On the flip side, if the market is really strong, and then it's going to go and make a stab at the highs of 22nd of November 2021, and maybe even towards 239. But this pattern, I'm really watching this one really carefully. because it was a target for us, but it's also a pretty good resistance as well because of the ABCD. And the market for 3 weeks, coming up to 4 weeks now, a month, has just gone nowhere. So it's just gone into a trading range, which shows that the strong move that had started, it's kind of stalling here. So keep on watching this region. We would ideally like to see a clean break of it on either side. Now let's take a look at the XLV. This is the healthcare. Healthcare had been pretty strong as well, but ever since it hit our 1.618 expansion of this entire trading range since 2021, it's just gone nowhere. It has pulled back right into the 20-week moving average. The chances are it might just consolidate here for some time before it begins to either resume its rally or maybe do an ABCD move lower. So just keep on watching. I think we should really begin to get more bullish on it if it begins to clear this convincingly, the 1.618 expansion level. Now let's take a look at the industrials, and we know that the industrials have been having a really fantastic move. As the weekly chart for it, we had identified this ABCD in the black. I had not labeled it, but all the followers, long-term subscribers know what we're talking about. An ABCD, 1-to-1 price projection, and we came up with a target of about 141, and we're not too far away from it. I think we've got about a couple of bucks lower. So we have been watching this one for a number of weeks now, and it's just moving towards our target. So that's good to see. Then if we take a look at the XLB, which is the material sector, and it is also right at the 98 level, which is the 1.618 expansion. It's a shorter term target, but looks like it wants to go and touch the $100 level. Last week was pretty strong for materials. So this whole metal, I don't know whether it's related to probably some weakness to be expected in the US dollar, or I believe there's just a lot of demand coming in for metals and materials related companies, stocks producing that, just because there is quite a lot of demand for it. This is what I think. I think it's more demand related than on the flip side of the currency, US dollar getting weak. Now let's take a look at XLC, which is the communications sector. It's also pretty strong. Ooh, wow. So here, look, it has done its ABCD right here. So one has to be more careful. Of course, it could get extended, but not by much. So I think it will just go to the 1.272 expansion of this swing. So just one needs to be very careful, but it has completed its ABCD, so met the target. XLK, we had a look at the QQQ before, so we'll have a really quick look at the XLK. You can see that trading range is not able to take out the highs of 8th of July, and we had earlier taken a look at the futures chart as well, so I'm not going to go into the details of it. Now let's take a quick look at the XLF, which is the financials. Here we go, another fantastic week by the financials. It's moving towards 49, which is going to be our 1.618 expansion. So it's going for the $50 mark. And now let's take a look at the XLE, which is the energy sector. And here we go. So the energy, at one time we had turned bearish the energy. It was right here somewhere in the summertime. And we were quite rightly, we were right in that. And now what it appears to have done is, I don't think it completed the proper ABCD right to the tick, but it was pretty close. Here we go. Here we go. Oh wow, so it completed the ABCD. I was wrong. I think I've got that on the daily chart. We'll have a look at the daily chart as well. But look at this trend line. It's that is supportive. And look at this big move that took place 30th of September, pulled back right in the 20-week moving average. This is where it's likely to find support. I think the energy remains sideways to the upside till we have a convincing break of this trend line, followed by this low or ABCD taken out to the downside, which is around 83 mark. And if we just move down to the daily chart, here we go. and look, there we go. And what we are looking at is, yeah, it's completed this red ABCD pulled back a little bit. This whole thing now looks like a channel formation, and we might be actually an ABCD move higher as long as this 86 level is held. Well, it's not really 86, it's now 78.6%. There we go, right to the tick. So as long as 83, it is 78.6% is held, I think we might actually be in an ABCD move higher, which means that this it's going about $100 roughly. So energy, yeah, looks like it's coming back into action. And if we were to take a look at ExxonMobil, here you go, that had a really nice break on the 30th September as well, just like the ETF itself, and it's just pulling back a little bit here. Now let's take a look at let's go actually inside some of these sectors as well. So let's take a look at IHI, which is the iShares US Medical Devices ETF. Look, it had a fantastic move last week. I think it's a really good one. It's breaking out of this range, so it's got chance of we had identified this inverse head and shoulder formation. So to me, it looks like it's in this bigger ABCD, which I've not drawn here, but we can actually do this. So it's interesting to see how this rotation is actually playing out. Where we are seeing weakness come into, let's say, stocks related to technology, but some of the other stocks, there is a possibility that it's this big ABCD. But if we were to just draw a retracement and look at some of the potential resistance there, so it has cleared this 61.8% retracement. Next level we could look at 62.30, and then I think after that it's going for the highs of around 67. So the communications, excuse me, the medical devices is doing pretty nice. Then let's take a look at home builders, XHB, and home builders have also been strong. I think that this is maybe this is a supply demand thing, but also maybe because of the potential of interest rates moving lower, I might have to do something with it. It met our target of 121, which is 1.618 expansion. I think it's just extending this leg, so keep on watching this space. Looks like it wants to go and tag 130, but the situation will begin to change if it begins to take this 118 out to the downside. Then I think it can pull back quite a bit actually. Now let's take a look at the XRT, which is the retail ETF, Spider Retail. Look, it's just been in a sideways trading range for a very, very long time. In fact, throughout the 2024, capped by about 50% retracement. We are moving into the holiday season really quickly. That's where a majority of the retailers make their revenue and also profits. So hence the term the Black Friday, which exists, where retailers went into black. So I think because of the back of holiday season expectation, maybe it's able to actually break out of this range to the upside, but we'll have to wait and see. But you can see there are some other sectors around here which have done which are doing pretty good. So one has to make. But this is what is happening with the retail. So consumer might not be as healthy as one might have thought. Now let's take a look at IGV, which is the tech software sector. Really strong. I think we are going towards 101 level, which is the ABCD, and 1.272 expansion. So one can actually look further into the software sector, this ETF, and pick some stocks if one is inclined towards trading individual stocks. Then let's take a look at KRE, which is the regional banking ETF. So here I think it's gonna go for the 61, 62 levels, which we have been watching it for a very long time. The good thing is that it wasn't this big trading range, and then last week it made a stab at this swing high, then pulled back close right towards it, but it's got a chance to actually go and hit that 61 to 62 level that we have been watching for a very long time. In fact, pretty much to 2024. Then let's take a look at SOXX, which is the semiconductor ETF. The chart looks very similar to the NVIDIA, and you can see that this is where the high came in, and the semiconductors, in my opinion, they're more likely to be range bound than having a fantastic move. I think the fantastic moves that we have seen in semiconductors, they might be coming to an end, and we might begin to see more of the users of these chips begin to perform better now. So this is what the semiconductors are doing. Let's take a look at IBB, which is the biotechnology. It's a very specialized field. I don't have much knowledge about it, but the chart tells you a lot. Maybe we get into this shadow region, maybe not. But it's something I don't really like to see myself, so I'm just not gonna spend too much time on it. Then last we'll just have a really quick look at the 10-year treasury from a yield perspective. So I'm not going to spend too much time on it because we have already covered this in detail in the other video. But here we go, and what we can see is the yields they rose up quite a bit last week, and now it's just finding resistance right from here. My suspicion is that we have this trend line right here. So we are actually likely to see that it moves back right towards 330 level around here. But on the break of this trend line, I think that's the yields are going higher. This is what we are watching in the many sectors and the key U.S. stock markets, and I think we covered a lot of things. We covered the major markets, S&P 500 cash futures, Dow Jones futures, NASDAQ 100 futures. Then we covered Russell 2000. Then also we covered the sectors, and also some of the ETFs which represent those sectors. So I think you guys will find this video a lot of educational material in here, and if you happen to find this video of interest, then please give it a thumbs up. And if you like our technical analysis, have a look at these markets, how we use pattern recognition and Fibonacci retracements, then please do subscribe to the channel, and if you do, then hit that bell icon button. That way you will know when the new videos are posted. So thank you very much for watching the video. Good luck, good trading, and I will speak to you guys soon.